Hey everybody, it's Nick Poe, Chief Investment Officer here at Jennings & Associates. Wanted to come to you from this beautiful Tuesday morning in Paducah, Kentucky to talk to you a little bit about the Q3 portfolio updates that we have coming your way. If you're getting this email, it means you are part of our managed portfolio, so this will by and large impact you in some capacity. But last week we met, as the investment committee met, as we always do, at least quarterly, to discuss the portfolio. Spent several hours analyzing, year to date, where it's been, kind of where we feel like we're setting right now, and then also looking forward to the coming months and years to see how we feel about the portfolio, if any changes need to be made. Perhaps against all odds, this year the market's done exceedingly well, considering we're still in the middle of this global pandemic that just doesn't seem to be one to leave us. Also in the middle of historic rates. Interest rates. They're still incredibly low, if not non-existent across the board. So those are obviously some things we're contending with in your portfolio, particularly in buckets 1 and 2 as we manage through those. But we did meet as a group. We had several ideas to talk through, and I'm going to share some of those with you today and let you know what to expect going forward. But right now, overall, so we are very pleased with our portfolios. We have 6 different risk categories for our portfolios, ranging anywhere from a 25 risk profile up to a 65 risk profile. And if you're getting this email, like I said, you're somewhere in one of those ranges with your investment portfolio. Again, you're used to this by now. We talk about these through buckets, so I'm going to kind of share it through the same lens with you today. Bucket 1, though, that is as you mentioned, is our spend bucket. So that is the money that's intended to be set aside for the next 1 to 3 years to produce income for you or to give you strategic deployment opportunities should the market have volatility, and that way where the income is going to come from. Right now, we've been overall pretty pleased with that. Like I said, obviously, interest rates have been incredibly low, so we are outpacing. We feel like the general trends there, doing it in a way we feel is comfortable with the risk profile we're taking on. However, we've had gold as an exposure there, as a commodity, as an inflation hedge. And we feel like the volatility of that commodity right now is just a little bit out of range for what we want in bucket 1, though we do still feel like we have a need for inflation protection in bucket 1. Obviously, there's been an influx of cash coming to the system, and with that, there are expectations for inflation to be a relevant factor over the coming years. So to navigate that, what we've decided to do is we're going to replace gold as a holding in bucket 1, and we're going to replace it with short-term Treasury inflation protected securities. You're going to see the name change go from IAU to VTIP on your portfolio. This change is going to happen automatically for you, but we'll be adjusting portfolios to still target the inflation protection that we feel your portfolio needs. However, try to do it in a more managed risk profile that the commodity gold hasn't been able to do for us. Bucket 2 is another change that we're going to see. We're actually going to add, right now we use 3 names in bucket 2. We're going to add a 4th name. The reason why we feel like we need to do that is, bucket 2 by intention is to use for years 4 through 9. We use options-based mutual funds and ETFs to manage that. And what we're sensing with that right now is they're pretty constrained by design to the range of amounts we want to keep it in. We're going to add a 4th name in there that we think will allow us to expand the upper bound out, give us a little bit more of a return profile as the markets perform well. We feel like we're just a little bit lacking when the market has these long extended run-ups like we've experienced year in, year out for the last 12 years. That bucket 2 could be a little bit constrained to that. So we're going to introduce a 4th name, and that name will be HESGX is the ticker. It's through Horizon. It's a defensive core fund. So again, it's going to follow the S&P type names. It's going to also have some defensive components to it. So we don't expect the level of volatility we would if we were just in S&P type exposure only. So again, that will be the only bucket 2 changes we see in Q3. We'll be adding that 4th name into bucket 2. Bucket 3, we're actually very pleased with. Currently, we're attacking it through 3 names, one of which is ITOT. It's a total investment fund. It tracks the broad markets domestically. It has, 3,619 stocks in it, so well diversified. You're getting exposure across the board. And we feel like you need that right now, by and large. And the performance on that's been exactly what we need to do, and the target we need to have in bucket 3. And the expense ratio is what we want to see in that as well. We also have international exposure. We're using that again through broad market exposure through internationals. I think the name we're using there actually tracks 4,311 stocks. So again, well diversified. These are kind of shotgun approaches where we're just getting a broad markets, we're tracking them because the broad markets have been doing exceedingly well over the last several years. So we're just going to kind of latch onto that and ride their coattail. The third name we have in bucket 2 is FTCS. It's First Trust Capital Strength. And what we like that is this more of what I call like a rifle approach. It's more strategic, where the names are getting rebalanced every quarter. They limit it to 50 names. And right now, one of the biggest, I think, factors of that is the kind of the expectations of that is you have to have at least $1 billion in cash. So as the funds do. So, or the stocks in the fund do. So in these times of volatility, I like to know that the companies in that approach are really cash heavy. Should we go through more downturns, we feel like that's a key core tenet we want to have in the short term for these funds. So again, overall, the buckets, we're very pleased with the bucket system. I think everybody can echo that. We've seen, last year when the downturn did exactly what we needed to do. This year in the uptrend over the last, 12 to 15 months, again, we're seeing exactly what we needed to do. But we're just seeing some little efficiency tweaks we want to make there, largely, like say, control the risk in bucket 1, still be worried about inflation protection, so we're going to use a different tool set there. In bucket 2, we just want to extend that range profile in the upper end, so we're going to introduce that fourth name in that bucket. Like I said, these trades should be occurring in the next couple of days, so you will receive confirmations in the mail letting you know these trades had occurred. No action is needed from you. We're going to take care of that as part of having a managed approach and us handling all that here in Paducah for you. If you have any questions, obviously reach out to your financial advisor. They've been involved in these committee discussions. They definitely voiced kind of some of the feedback they've had from clients. So we're all on the same page of this. If you have any questions at all, just feel free to reach out to them and they'd be glad to help you. We appreciate your time, guys.